Ladies and gentlemen, welcome to another ShareWise webinar. I just want to formally introduce myself. I'm Harry McCaskill from ShareWise, one of the senior advisors here. Today we've got a special webinar with Shekel Brainweigh, and we've got Danny Nadri, the country manager. So as you may or may not know, they're headquartered in Israel. I'm very excited today to hear what Danny's got to say, go through a specific area that he wants to discuss. I guess how it will work, we've got a presentation from Danny, and feel free to drop in any questions throughout the webinar because we'll have a Q&A at the end. So you can ask Danny anything, we'll go through it and really just take a bit of a deep dive into the business. He's excited, I'm excited. Thank you, Danny, for your time, but I'm looking forward to it. I'll let Danny take it away.
Cheers, Harry. Thanks for the invitation and happy to do this. I think for the first time with the ShareWise audience, so we're excited to share the story with your audience too. So yeah, I think the way we want to possibly run it is just tell the story with few slides and one of two movie clicks just to see that we tell the story and then go into the Q&A if that's okay with you.
Perfect. That sounds like a plan. I'll let you share your screen, take it away, and then we'll go from there.
Cool. Let me just try to do this now.
Perfect. Excellent.
We all good?
Yep, perfect. All good.
All right. So Shekel Brainweigh. What we want to do is just go through the highlights first. So, if people may already know the story, so just the highlights of the last 1.5 years. Go to corporate overview, but really the main focus of the presentation today is this new capability in retail automation, which is where the main focus of the company has been in the last few years, and where this whole thing fits into the whole retail environment today. We're going to talk about just another 2 segments that the company is operating in at the end, and a bit about the outlook, but there's quite a lot of materials to go through. So that's just a disclaimer. So really, Shekel is a company that exists for more than 3 decades now. It's headquartered in Israel. Its Genius Lab is in Israel. It's been servicing clients from the retail industry and the healthcare industry, but it's also in industry and other market segments globally. Now, what happened is about 6 years ago, the company decided to invest in an own startup, a startup within the business, and that's where it was listed. So what you see really is a combination of a mature business that's been operating for a long time, profitable, and the startup. It's listed on the ASX since the end of 2018 under information technology and industry. The market cap is about 10 million today, 100 employees. You see where we operate globally in Europe, UK. Most of the clients of the business are kind of blue chip, large companies from the US or Japan. About 200 million shares on offer. The share price should be 5. I think that was a presentation that we did on a few days ago. Still held significantly by the main 3 founder groups, which is Excel Partners, Concepta, and Bekesha. They still own in total about 60-65% of the business, and that we'll get to the free flow situation, and the rest of it is sophisticated investors, some from Australia, some from others, and that's basically the company overview. We only have numbers for the end of 23, which is the end of we go by calendar year, so the end of 23 has been the last time we released numbers, and it was at $27.2 million US. So it's about just north of 40 million Aussie, and it actually represented a growth of 3 consecutive years. You'll see the share performance not really exciting in the last year, but we hope to get it better. So just a summary of the last 1.5 years, if you will. The numbers that we have is for the end of 23, which was the end of December 23. We go by calendar, like I said. It was a record revenue of $27.2 million US. and it represents a third consecutive year of growth. So we listed the business, it was 18, and now it's 27 million. So we have been actually growing significantly after COVID, and we keep on seeing this growth continuing, double-digit growth in the last 3 years. The other thing that you see is a 41% reduction in cash burn to 2.4 million. This is important to note. There's a part of the business which is very profitable and always been profitable. Once the company start investing in the new startup, we reached a peak of cash burn in 2021, which was roughly 400K a month US. Then it went down in 22 and further down in 23, and the company is edging closer to a break-even position as we go, and the revenue is growing and the investment in R&D is reduced. Some of the key highlights, I say, of 24, which is the 6 months, January to June of 24. We continue to see growth in revenue. We'll publish numbers soon, and we are planning to have a roadshow in September. So we'll continue to see growth in revenue compared to 23, which is pretty much in line, actually surprised us even more than our internal plans the first 6 months. We saw significant orders for our new products, the smart cards and the smart coolers. We'll talk about it, but it was published on the 2nd of April, $500,000 US order, a second order for the smart cards, and about 300,000 US dollars, 450 Aussie on the smart coolers for the UK market, which is quite exciting to see that the new products are picking up. During January, we launched at NRF. NRF is the largest retail exhibition in the world. In New York, we launched Sentinel, which is a breakthrough technology, and I'm happy to show you a movie about it. This really fantastic, almost futuristic capability. And continued improvement of EBITDA will basically what happened is that we used to manufacture in 2 facilities in China. By the end of 23, we closed these 2 facilities and moved manufacturing to the Philippines. That showed quite a significant improvement in the cost and the supply chain. And we already see the benefits of it in the first 6 months of 24. So what's the story of today? It's about retail automation solutions. So by retail automation, we mean how do we look at how people shop and what impacts the way that automation and technology help them shop better and more efficient. By this, we mean both for the consumers and the retailers. What's the story behind Shekel? It's basically a technology company. It was always a technology company. And we always develop newer and newer sensors and capabilities, predominantly in weighing technology. So we have this core competency in sensor technology that we developed through the years, which service retail, but healthcare, but also the industry, airports, even the trucks that are being measured. So we actually understand weighing, digital weighing in a very, very good way. These are all patented technologies. The new components which you see there is the artificial intelligence and machine learning. That's actually the component that we added in the last 5-6 years to create a new enabling technology. This technology is already Gold Partner Award by Intel 4 times in the last few years in 4 different categories of Intel. So if you go into Intel website and you key in Shekel Brainweigh, you'll see that the technology is pretty much recognized by a very significant technology behemoth, if you will. I hope you could see this now. We were trying to explain how this actually works. It's not simple, but you basically create a capability which we like to think about it as a talking shelf, or in the future, a talking bay. Think of it, we take any surface like a supermarket shelf, and we almost like create an artificial grid underneath it. So think about it as if we are creating, there's not really a grid, but we do this with AI. this artificial grid allows us to really understand any product movement on any surface, on any shelf. I hope you'll see this now, and we try to put it in an animated movie. So we'll go into this now.
In a dynamic retail landscape, Shekel emerges as the future of autonomous retail, with a proven solution that's transforming retail environments globally. Shekel's smart shelf technology utilizes load sensors and artificial intelligence to accurately communicate inventory changes to a central data system. The technology identifies every product and event instantaneously. Shekel took the smart shelf technology to create Sentinel. Sentinel retrofits into existing retail setups for maximum efficiency and minimal downtime. It leverages the power of AI and machine learning to transition stores to autonomous operations, collecting comprehensive data from a single shopping bay. Sentinel discreetly monitors every customer interaction with high-fidelity sensors and advanced algorithms. The result? Real-time product recognition. Sentinel enables a seamless customer experience, supporting the future of autonomous shopping with unparalleled accuracy and reliability. From traditional to frictionless, Shekel is the future of retail.
Hope that went well. So basically, the way we kind of move with technology is we move from weighing products, into recognizing products. So if we used to look at products in terms of weighing them and understand that they are 422 grams, we now actually understand that was actually a pasta sauce. So that was the big change, that we moved from weighing capability to recognizing capability. And in the future, we're going to move into data understanding. So we'll know what people put on shelf number 2 in a supermarket in Wollongong compared to a supermarket in Sydney, and actually give recommendation on planograms and product setup in stores. What's the big issue we're dealing with in the last few years? It's predominantly the ability of retailer to take an enabling technology and turn it into a working solution. They want to go more automated. Most of the retailers, like, in Australia, we see it predominantly with self-checkout, but most retailers in the world understand that they need to be more automated in order to be efficient and to offer products to people exactly where they need them. What they're facing in recent years is a big issue with shrinkage, or stealing, if you will. The ability to actually offer an automated solution, but at the same time, understand if there's any inventory which is missing, but also if there's a behavior around shrinkage, which is a problem for them. And I think that's where Shekel impacts, in a sense that impact the industry, that we offer an enabling technology that would allow them automation, but at the same time protect their inventory, and also allow consumer to have a more seamless and a good experience at the stores. We're all hoping that this cost saving is actually migrate to consumers and not vice versa, not remain only with retailers. So obviously that's definitely a big issue in Australia recently. So the idea is that while we offer this automation, the cost saving will be shared with the consumers as well. What's the ecosystem that Shekel operates today? On the left-hand side, you'll see our product lines, which is the self-checkout capability. So we offer a device that goes in OEM into operators like Toshiba, Diebold Nixdorf, Zebra, and others globally. And they in turn sell it to the CVS of the world, the Walmart of the world, and other operators globally. The actual stores that you see are actually using machines that Shekel device fits into this. The new product that we bring to market are right, you see here, so the smart cooler and the smart bay. These are actually autonomous solutions that allow consumers to interact with products much more seamlessly. We have different operators globally that sell this. AVS is our Australian distributor. There's a company out of Sydney. And they would normally interact directly with the market. So they'll either sell it to hotels or operators of vending machines or retail operators globally. This is actually a new product, which is quite exciting. We'll talk about it. There was an article about it today in the Australian media, which is a smart cart. These are some of our clients, custom-made, Wanzel and Shopik, and they offer this to players within the market. Netto is one which is using the smart card today in Germany. Basically a capability to take the self-checkout and embed it into a card. We'll talk more about this. And this is Shekel Holistic Solution. Basically what we want to look at is understand how people shop in supermarkets, or whether they shop in gas stations or in universities or hospitals, or wherever people shop for product. We want to offer them a suite of solutions, whether it's the smart bay or the smart cart, or really a smart cooler that actually allows them to shop. And while we aggregate data from all these locations, we'll better be able to offer them different solutions for different setups. We're going to do a quick dive into the products themselves. I think, within the limits of time. This is a market we've been participating for the last 10 years almost. You'll see the main players that we sell to are companies like Diebold Nixdorf, Fujitsu, to Toshiba, Ziba, very large players. They in turn sell these products to the people of Walmart and others. Not in Australia, which Woolies and Coles are not using our products here, but maybe that's why you get all these problems at the self-checkout. But it's been a growing market, as you'll see from the research. Most analysts, or all analysts, really predict continued growth of 12 to 15% in this market. We see this today not only in grocery retail, so in Australia you see this in Bunnings and other locations where there's a self-checkout. And we enjoy this growth because they are growing, because the other, the players that offer these products are growing. We sell roughly 50 to 60,000 of these units in a year. This is really a cool thing. We haven't seen this yet in Australia, but it's a smart cart. This is actually in Germany that you see here, two models, one out of Israel, one which is in Germany. Basically the ability to tell the self-checkout from the end of the store, embedded into a cart. So as you go in the store with your journey as a client, you can actually pick up products, scan them, put them on the cart, and you complete your transaction on the cart. So you weigh the product and you scan the product on the cart. All analysts show that this is going to be one of the biggest thing in retail automation in the future. So if we see today predominantly self-checkout at the end of the store, the ability to bring the self-checkout as a payment system during the journey of the client is something that we think retail and the analysts think that retailers are going to use quite a lot to improve the journey, but also to understand the consumer activity on the store, what they like, what they shop for. So this is actually a growing market for us. We've just seen the second order of $500,000 in 2024, following an order in 2023, and we're participating with this nice trial in Germany for a few tens of these carts in a German retailer. This is actually our first product to the automated market, and it's a product which is a smart fridge. Maybe the best way is actually to show you how it works with a nice movie from the Australian operator. Just see. Oh, sorry about this. Oh, I think we need to skip all this. Don't know if you. Seems like there's no.
You will notice some of the features on this screen, including a product information screen, cashless system, full double glazed window for all viewing, a European compressor.
We can't see the video. Yeah.
So this is the products out of the smart fridge.
Sorry. You cannot see the video, right?
No, I can't see the video. Try clicking on the link.
Let me just do this. Sorry about this.
That's all right. I mean, you guys have got a lot going on, so it's all happening by the sounds of it. Sounds excellent.
I'll try to. Do you see the presentation now?
Not now.
Okay, so maybe my whole sharing capability disappeared.
Let me see.
Okay, do you see it now?
Yeah, it's back.
Okay, so
You can use the cashless payment system. It is the inner-vending smart fridge. You will notice some of the features on this brand new machine, including a product information screen, cashless system, full double glazed window for all viewing, and a European compressor. So to access the products out of the smart fridge, you can use the cashless payment system, either by a physical card or using your Apple Pay or Google Wallet, like so. Simply tap the cashless system, the machine will start to validate, and then allow you to open the fridge. Now that we've accessed the fridge, this allows you to actually pick up the product and interrogate the ingredients and allow you to put it back if it's not required. As you see, every time I pick up a product and you look at the screen, it will actually show you what's been selected and the price of the product. You can actually also pick multiple products. This allows you to choose as many products as you like. As soon as you put a product back, you'll see that it actually removes it from the screen. So it won't charge you for any items that you haven't actually taken out of the fridge. The one thing it does do, though, if you actually put a product back into the wrong place, it will actually notify you to say, hey, it's in the wrong location. I'm going to charge you if you don't actually put it back. So make sure you always put the product back that you don't require in the right spot. So you'll see here, if I pick up 2 products, on the screen, there's a total charge there. As soon as I close the fridge, you'll see it will validate my purchase, process the credit, and my card was charged. If at any stage you change your mind and don't really want these products, simply put them back. You'll notice on the screen that it's removed the products, close the door, and your card shouldn't have been charged. This was the inner-vending smart fridge. Thank you for watching from all of us here at Automatic Vending Specialists.
Okay.
Now
You just go back to the presentation.
No,
Work.
Go back to the Prezzo. I'll tell you if it's there.
Okay.
Yep, we're back.
Oh,
wrong screen.
I'm just trying to get rid of that. Sorry about all this.
That's all right.
I think it's here. Are we good?
We're good. Good to go.
All right. So I'm not sure how we go for time. The other thing that you see now is what we call autonomous stores. These are stores that people walk in, take whatever they want, and walk out. It's quite a new concept. We have 7 or 8 stores like this in the world. The recent one is in Brussels Airport in Belgium. This is actually a store in the US, in Atlanta, a few of them in Paris, but quite a new concept that we start to see. Either completely autonomous stores or hybrid stores, where part of the store is autonomous and part is just a man regular store. So that's, again, something that the market predict is going to grow significantly. We operate globally. You'll see the locations where the company is either selling its product or its OEM devices. There's quite a few use cases for the new product. This is Colruyt, a listed company out of Belgium that took the smart fridges into fitness centers, to gym, a lot of gyms. This is actually point of sale in Diebold Nixdorf. This is actually really nice. The store, the autonomous store in Brussels Airport by Lagardère, a large retailer in Europe. And the smart card is the one that we know with Customate, actually an Israeli producer of the cards that have now activity both in the US, Israel, and reported a nice transaction in the UAE, I believe. So that's where we see some of the use cases. I'm not sure how we plan for time, Harry. So if we want to move into questions, I'm happy to do this. Otherwise, we could go deeper into the tech.
Well, I mean, it's an hour booked out, so it's completely up to you. I'm happy to ask a couple of questions, and then you can keep going. We've just got one pop in. So I mean, we can go straight away with one, and then we can continue with the presentation. If another question pops in, we can just jump between the two. What do you think?
Sounds good. Yeah. Let's do it more interactive. I'm happy to listen to questions.
Yeah, lovely. So we've got a question here. How many smart fridges did you sell last year?
Honestly, I don't have these figures, but it has to be. I would think about 500 is a number. I don't have the exact numbers.
Yeah. Okay.
They're sold for about $6,000 to $7,000 and a pop, and then a SaaS model that kicks in. So that's what's nice about the new products. They have a hardware component, like we sell the fridge, and a SaaS model that kicks in on a monthly basis. So every time a transaction happens, we know it in real time. We provide this information in real time to the operator, and we charge something like $50 a month for the usage of the data. So that's a razor blade type model.
Do you think that the market is really leading and heading towards this type of thing, like your smart carts, your smart coolers, your smart fridges, and all this automation? Do you think we're heading towards there, and how far do you think so?
Look, there's no doubt that that's where it's going. If you see, even in Australia, which granted we're a bit more spoiled here, we have a lot of space. We have every Woolies and Coles have this parking area. Where you think of New York or Paris or London or Beijing, it's difficult. You don't have these massive trucks within the middle of the street. So most of these places have to go smaller and closer to the clients. Yeah. And that's where we see the bigger demand for automation, predominantly in Europe.
Yeah.
But even in Australia, I mean, if you think of places, like the Coles and Woolies, even 5-6 years ago, there would be 6-7 manned units of payment. People would stand in line to go in front of a person and pay. Today, you'll see 15, 20 self-checkout at the end of the store. Yeah. Because they had to automate it, right? So you'll see maybe 2 people that serves you, and the rest of it will be automated. Yeah. You see this moving to Bunnings in Australia. So we actually see this globally. Like I said, we're selling 50 to 60,000 units just every year. Yeah, I agree. It's definitely going there. Yeah. How fast it's gonna go? The smart cooler, they're kind of interesting because they fit in somewhere between a 7-Eleven type setup and your normal vending. So I'll give you an example from Australia. A normal vending in Australia would normally sell $500 to $600 a month. These water and Coke machine, $500 to $600 a month. I'm not going to go into the details of some of the operators, but one of the operators we put in is actually a food manufacturer. He sold upwards of $10,000 a month. So $500, $600, $10,000 a month. So you see the revenue coming out of these machines. When people open the fridge and they can actually interrogate the product and they choose a sandwich and a drink and possibly a yogurt, they'll make a deal of $20, $25 a deal, which is not normally something you see coming out of vending. You see vending at $2 to $5 deal. Yeah. You see a much higher revenue coming out of these fridges, for example. Yeah. The carts is still new. We'll see how that's going to go. We think that it's going to be a combination eventually, that a supermarket, say a large supermarket would have today 400 to 500 carts. Maybe 10% of them will be smart carts. 20%. As a consumer, you won't have to do, you don't have to take a smart cart. So it's always a hybrid solution. It's always, retail is never 100% of anything. So it's you offer your clients more options to shop. And that's what is going to happen. So we think it's going to be a gradual change.
Yeah, I think that's it's a big number, and it's obviously heading that direction by the sounds of things. We've got another question here. We've got 2 actually. So the first one is, what has the growth rate of the fridges? What's been the growth rate on the fridges sales? And then also, why has the share price gone down so significantly, notwithstanding all these good technology and upgrades and updates, I guess?
Look, the rate of growth of the fridges have been every year a bit more. I mean, in few hundreds every more. It's still not in in 10,000 fridges a year. We didn't reach large numbers yet. The recent deal that we reported was 42 fridges for the UK market, which is part of what we consider a bit of a larger deal, and that's just for the UK market. I have to say that a lot of the issues related to how quickly we grew was also related to the funding that the company was actually not receiving as much as we wanted. There's nothing different in the market in the UK or in Australia compared to all of the US or Japan. Or so if we'll have more bodies on the ground in different locations, then the market in France should behave similar to the market in the UK, should be in Portugal. So the more bodies we'll have on the ground, we'll get more sales. We now recruited a top person for the US market, but it's been a constraint in terms of our ability to go to market with bigger effort, if you will, bigger funding.
Right. Yep.
And that was the main. There's nothing different in the UK compared to Portugal. We could sell in Portugal in the same way. It's just that we still didn't have a larger sales. The share price has been just frustrating, to be honest. We're a company that's growing 3.5 years now, double-digit growth. We're in a higher position, a better position than we listed the business. The tech has been almost completely finished its R&D. We go to market, we start selling. So in a sense, there was a promise that was made to the market that we're going to develop these solutions and we're going to bring it to market. Didn't happen maybe in the pace that we wanted, but I don't think that a company that is now at upwards of 40 million Aussie and probably edging towards 45 million Aussie needs to be traded at less than 10. So we traded at a quarter of our revenue. Frankly, I haven't seen even one company on the ASX that could show that they're selling to GE, Toshiba, Fujitsu, selling to have been recognized by Intel, and is traded at a quarter of its revenue. So I honestly cannot explain this. There's an issue with the tight registry. We can talk about the registry later. But the three founder groups are still the one that own the major bulk of the business. So we have suffered in a way from less liquidity. Yeah,
there's been a lot of low volume, which obviously doesn't help things at all, to be honest. I know. I've been following you guys for a while. I've been following a lot of other companies that it is tough on the low liquidity and low volume. But I guess what's the plan moving forward to engage the market? Roadshow in September following the release of results, or what's to come for you guys?
Look, I think some of it has to do with even further improved EBITDA. I think that especially some of the investors in Australia, tech companies, the way any tech company, it doesn't matter if it's Google or Facebook or any large companies, they start their life by losing money because you invest in the tech and you invest in go-to-market. And every tech company will invest in new capability, and this is a phenomenal capability, requires this funding. So it takes time until you pretty much reach this equilibrium and bring the business to a healthy territory. We're nearly there. So we had all the spend in 19 and 20. 21 was the biggest year in terms of cash burn, over $400,000 a month. Now we reached 240 and less, and it's going to be a lot less now. So I think we're edging towards the point that the company is going to break even. And I think maybe that will make a good impact on investors, which are a bit more conservative in the sense that want to see the numbers balance out. And maybe that will make an impact. The plan is to do more of what we do with ShareWise. So, this is a good platform to tell the story.
Exactly.
And we're going to do a big roadshow in September with a CFO of the company is participating. We have recruited more people in the US, so hopefully the numbers will show. But the idea is practically to do this, I think, tell the story to more and more people. This is a legit company. I got to tell you, there's people that talk about AI and almost like think about AI in the last year, and I hear all of this discussion. We've been developing in AI in the last 7 years. This technology is already mature to the level that we're selling in AI. So it's not something we just jumped on a bandwagon recently.
I guess it's just the fine details now at this point, right? Like the automation, the technology is only going to get better, and that's a no-brainer at this point. Because I remember, a few years ago, seeing videos of these sort of automated, the vending machines, fridges. I'll say fridges, right? And it looks like there's just more and more adoption, as you say, more so in Europe than Australia. And I think obviously we're just lagging behind, but it's just a matter of time by the sounds of it. Would you agree?
Yeah, I think. Look, introduction of completely disruptive technologies and new technologies takes time. People talked about the fact that we'll have automated vehicles by now. That all 20% of the vehicles on the road will be automated, and we're not there yet. People talk about it for 15 years, but we do know about companies that are selling devices for vehicles. So every car today will have automated devices around it that actually detects it if you're about to hit somebody. So Mobileye is such an example from Israel. They were sold for $15 billion to Intel. So we maybe not having complete autonomous vehicles yet, but we have the technology capability that allows it. What Shekel does is exactly this. We bring the enabling tech that allows them to move in the pace that each of them are going to move, and not all of them are going to move the same way, but bringing this smart shelf, if you will, or smart sentinel, this capability of tracking products on a real time. That's a capability that enables them to do this. And whether they do it in a small scale like a fridge, or whether they do it on a half of their store, each of them is going to move in a different way. The other thing that we're doing that is going to be significantly huge, and you'll see it in this slide under the bracket on the right. See, once we collect data from the shelf, we collect data from the granular level of where the transaction actually happens. We know Harry interacted with a pasta sauce and now return it to the shelf. I don't learn it from the invoice. I learn it from your activity on the store.
Right.
So that eventually allows me to recommend people put the pasta on shelf number 3 rather than number 1.
That's what I was saying, that can get tracked.
If you're in a university, then guys really like yogurt. So if I can actually understand how people shop and then recommend to people how to arrange their planogram, which products to actually put in the store.
Yeah.
Look at what happened in Australia. Woolies would have 45,000 products on every large store, but in this metro store, they already have only 11,000 products. When you look further down, it's going to be, every 7-Eleven have roughly 1,500 products. The smaller you go, you need to be a lot more accurate in the products that you put in there on the shelf. That's your real estate, the shelf, right?
Right.
Yeah. I see another question here from Gareth, if you want to look at it. Or you want to say something else?
Is there another one? Whereabouts?
I see somewhere in the chat from Gareth Morgan.
Oh, yeah, I see it now. How will it be possible to grow at exponential rates without considerable new investment to allow product production to meet demand?
$1 million question, Gareth. I don't have an absolutely good answer to this. I just hope that the company will get enough funding to continue grow exponentially. So far, it's been a situation that it's actually the main shareholders of the business that have been funded it. Main shareholders from the US that's been funded the business. With the share price being so low, it was hard to, if you will, create a scenario where we can raise another 20 million and actually push pedal to metal, if you will. And we've been somehow conservative in the way we grew because of the funding. We are actually taking we had some ideas on how we can continue to fund the business in a way that would allow us exponential growth. But we are working towards this. I cannot actually talk about funding at the moment, but this is definitely a goal of the company to give management a lot more funding to be able to grow the business. That's what the management wanted all the time, but it's
It's there's a fine line, definitely. Obviously, the share price being so low doesn't make things easy. Obviously, you don't want to dilute the price or dilute shareholders too much. So it is something you're obviously battling with and dealing with. I guess for yourself and a couple of the other, I guess, managing directors or the team behind it, what's your experience and expertise in the industry and that you think is really going to put you guys ahead of anyone else, any potential competition?
Look, I've been in the tech industry for the last 30 years. So, and most of the players have been there for tens of years. And, you know, we have the Genius Lab, which are really strong players. I think it starts maybe from, if I could go back to the slide that actually, I think in terms of our ability to participate in the, it doesn't actually allow me to move, but I think it starts from this slide. It starts from the fact that for the last 10 years, these are the people that we've been selling to.
Yeah.
The player that, when in terms of go to market, we know all these players. We know the Yohananov, the Colruyt of the world, the Walmart of the world. We know Casino. So we actually had experience in this retail. We, in the last 10 years, picked millions of data points from locations where people are actually shopping. So first of all is our intimate understanding of the market. The second one is the technology, which is completely defendable. It's a really, you know, people think about tech and sometimes it's just a software piece that somebody develops, or this is a combination of a very complex patented hardware plus an AI algorithm. This integration of first of all, a very strong sensor that, you know, over years that we developed, and the algorithm that sits on top of it is more than just a software piece. It's not only that it's patented, it's the fact that the trade secret behind creating this grid is something that is completely, it's very difficult for anybody else to do. So I think that the fact that we have this tech is something that will carry us for the next few years.
Yeah.
And strong management. You see very strong support from our main investors. So you know, about 50% of the business is owned by an American investors between Excel Group and the rest of the, and they keep on supporting the business with their with loans and whatever the business needs. So I think that, you know, we're on the path. We just wanted to move faster, and it's just you know, take a bit of a slower pace.
Yeah. I guess it's all about opportunity timing, and it's a bit of a slow burn. But if there's any more last questions, be sure to just throw them in there in the chat. But it sounds like there's so much advancement, so much technology that's coming out. It is very, very exciting. Obviously, the way he's talking about it is very, very exciting. Is there anything just quickly you want to touch on before we end the webinar? Just to wrap it all up for the listeners?
Yeah, you know, just to go back to the thing you said, and I understand investors, I think we somehow need to align our business positioning and the fact that the business is growing and managed well to our positioning on the ASX, and hopefully with, you know, more retail investors and people that will learn the story, we'll see there's a really massive growth in the share. It was already at 30 cents. There's a massive growth that can still happen with this share price, and we look for people to engage with us to explain the story more and hopefully get a bit more momentum and demand.
Perfect. Well, just last one to wrap it up. Gareth just sent another one in really, really quickly. He said, thanks for the response. He also mentioned there's some talk on a platform called Hot Copper about a large order from a casino group. How would such an order be funded, and do they prepay for the purchase, or what does Australia add to the group?
I'm not sure about it, this particular order, but the company has funding to manage its orders.
Right.
There's no. Just to give you an understanding, every time that GE is ordering the OEM for their incubator, they would normally pay you 4 or 5 months after you spend the money. So that's the type of cash flow that we deal with. This is large clients. They always pay, but they pay a bit longer. So if it take us 2 or 3 weeks to produce a device and another 2 or 3 weeks to ship it, and by the time that they get it and by the time they pay, there's always a bit of a gap. between how we produce things and how much, where the money is being paid. So we don't take orders that we think that we couldn't fulfill. But,
Of course.
obviously, there's always a gap in how we get funded.
Yeah.
And large players like Casino would pay, but there is a gap, and it's not in the level of funding a particular deal. I would say it's more of a funding in a sense of, can we recruit now 5 people for the US market? Can we put 2 people in Japan to cover Japan, Korea? Can we actually do 3 more support engineers in Europe? That's, I think, the level of investment that we need. It's not in the level of a particular deal.
Excellent. I think you've covered a lot. I think the watchers and the listeners are pretty happy with that. I just want to again thank you on behalf of ShareWise, Danny. That was awesome. Now it's going to be recorded, so if anyone missed a part of this or wants to go back and rewatch it, it's going to be on our YouTube channel, ShareWise. It's also going to be on our website, sharewise.com.au, and then also we'll send a copy off to Shekel Brainweigh, and they'll be putting it on their socials, I can imagine, or on their website, wherever. But it was a pleasure today, Danny, and yeah, let's ride the wave and hopefully things sort of lead in the direction that you're hoping.
Thanks, Harry. My pleasure being with you and your audience. Thanks for the audience.
No, that's all right. We'll talk soon.
All right, buddy. Be well.
Bye.